Hey folks, welcome to InTheMoneyStocks.com market correction analysis for August 9th, 2007. Unbelievable bloodbath today, guys. No doubt about it today. It was just unbelievable. The Dow dropped 387 points while the NASDAQ dropped 56.5 points in an unbelievable just continued sell program ever since the basically 10:30 this morning. It was just constant movement down. We really started to dump heavily around 12:30, and that was when the hard sell came into the market. The key here is we also closed at the low of the day, which gives us a little inkling that tomorrow more is to come. And if you guys remember in yesterday's video, we were talking about how Wave 3 was on its way. We had said yesterday that in the video yesterday that we called the top at the 1505 level when we dumped out huge on that Goldman rumor, and then we rallied back once that rumor was called to be false. However, we also said yesterday that we thought we needed to retest. So when the market gapped down today, huge, we said to all our people in the chat room, guys, hold off. Don't go short here, guys. Wave 3 hasn't technically begun yet. We need to push up. We need to scare all the shorts out of the market, and we need to try and retest that 1505 to 1510 marker, as we told everyone in the chat yesterday, in the video yesterday. And what happened at the open, folks? Look at this rally up. We basically went from 2570-ish on the NASDAQ all the way up to 26 and change. Alright, that's a huge move on the NASDAQ. You're talking about a 40-point move up, taking the NASDAQ positive, folks, before the selling ensued today. Alright, and I want to show you guys here what happened. Once we came up here, look at all day we had a wave after a wave of selling down. Really, the major selling started right here. Once at 12:30, as you guys can see right here, straight up 12:30 it began, and it just continued all day. Alright. And again, the key is here, we closed at the low of the day, at the end of the day, and that leads us to believe that more is to come. Keep in mind, every time we've sold off hard, the markets come back to rally. Whether it's the next day or the next couple days, we always rally back. I'm saying right now, and this is an intraday thing too, guys, mind this, even intraday, like this morning, this move up, someone's always coming in and buying this market. And I'm telling you guys now, this is going to stop. There's only so many times they can save this market from rolling over hard. Everyone's freaking out saying, oh my god, the Dow is only down 5% or whatever. You know, it's not a huge correction yet, alright? We do need a correction. InTheMoneyStocks.com from the beginning has been calling for a 15 to 20% correction. And I'm telling you guys right now, these little savior times is not going to happen. We need to flush out hard. We need everyone who thinks we're going to get that move back up tomorrow or the next day to be fooled, and we're just going to go down lower. So I want everyone to be aware of that. Be careful if you're going long. There's no reason to be long in this market. If anything, you should be in cash, or you should be in ETF 2-time short plays like the QID, the TWM, the SDS, and you should be safe, alright folks? There's no reason to be long here yet because we haven't even started to panic. Notice today there was no real panic, even though we closed at the low of the day. You didn't see Kramer flipping out on the TV. He was actually, it looked like he was just very calm on TV today, in fact. And until we totally see that panic, which is going to take us through the lows on the NASDAQ, and I want to show you guys this. Wave 1 here, Wave 2, and now Wave 3 has begun, and it's going lower. It's going to go like this, guys. We're going to take out this 200-day moving average right here. Alright? And I want to show you guys how key these moving averages have been. Any trader that does not trade with moving averages is insane as far as I'm concerned. Because in moving averages, there's no reason to buy above a moving average or a short below a moving average when it gets to a certain point. For instance, right here, there's no reason to short go long right here when you're this far away from the 200 moving average. Look at what happened. We touched the moving average to a T. We bounced up 3 days later, touched the 20 moving average, which is a yellow line here, to a T. Then when we gapped down today and we came back up and touched the 50 moving average to a T, great short signal right there, and the market continued to dump out and close at the low of the day. As far as I'm concerned, the 200 moving average now is our next stop, which is right here, at which point we will hover on that for a day or two and then break below. This market, this Wave 3 is going to take us all the way down, just like I just said, guys. And I want to just reiterate that in the video that I posted yesterday, how we said this yesterday as well. We are going lower in the long term, guys. When you look at the broad picture, we are going to dump out again. We are going to go to new lows, because when you're talking about wave patterns, we've only had Wave 1 down, and I want to show you guys the wave, alright? This is Wave 1 down. This is our retracement. Alright, and we're going to probably go up to around this point right up here. Probably right up against the 20 moving average, or pierce of the 20, so a little higher here. And then what we are going to do is we're going to drop down again. Boom. All right. All right, folks. As you see, what we were talking about there, and that's how we knew this morning that the market would rally up. Now, we thought it might touch the 20 again, which is lower than yesterday, obviously, but around that 1505 marker. We got almost there on that move when the NASDAQ went positive right up here, but we did not get there. And then the selling ensued, and the second you see that move coming down, you just have to know, all right? This is the next wave down. This is going to take us to new lows here in the near term. It's going to take us below the low here, and we're going to actually go back to the early March lows and then break below there. We see it. InTheMoneyStocks.com's been calling for a 15 to 20% correction here. This credit issue, guys, is not going away. More hedge funds are closing down every day. They're finally actually admitting it. We've been saying this in the videos over the last 2-3 weeks, that more hedge funds besides Bear Stearns are in trouble. Trust me, Bear Stearns didn't do something wrong here. They were doing what everyone else was doing, just like all these mortgage companies were lending to without asking any questions. They were giving out money like it was candy. All right? And that's coming back to bite everyone in the ass right now. In addition, what I want to show you guys, or talk to you guys about here, as we flip back to the intraday chart here on the NASDAQ and look at this incredible sell program. And just before I go on to my next spiel, I want to show you guys this. This is the intraday 200 moving average, right here, this line. All right, where do we close? Boom, right below the 200 intraday. Now, what does that mean? Well, technically, that's a breakdown. You close a candle below a 200 moving average, what do? You go short. You go short there, boys and girls. So be aware of that, all right? And I also want to show you guys some odds and ends here. What I want to talk to you guys also about here is the European liquidity. So the dollar actually did okay today against the euro. However, the yen was up huge against the dollar and the euro. Change on a technical level. All right, folks, and that is totally key, so realize that. Now, the Fed futures have already priced in 100% cut for September, and I'm saying, oh, give me a break. Not 100%. I'd be shocked if the Fed cuts that fast. If the Fed needs to cut that fast, watch out, because this market is going to dump out like a rocket ship aimed at the ground. All right? Things are much worse than people realize if the Fed has to cut in September, and this market is going much lower in that case. The chart we now have up is the ES future chart for September 07, the E-minis, September S&P 500 chart. And I like this chart because it's very accurate. What I want to show you guys here is the bounce that we had yesterday took us up to that 20 moving average. And I've been talking a lot about moving averages because they're so key in giving you buy prices. You never really want to buy too far above a moving average. All right, folks? So what I want to show is the intraday chart here. And again, you saw the big move up here. All right, this is pre-market to here, 9:30 starts, we have a big move up, and then selling ensues. All right, look at that move down, this long move down. It's just one big sell program after another, really, with small bounces along the way. And again, I want to draw your attention here to moving averages one more time to show you how important they are. Look at this moving average. This is the 50 moving average. Did we close one time in any candle there above the 50? No, we closed on the candle, right here. We closed below, below, below. Never above. And I'm showing you guys that. These moving averages are big time. And that's why when you're talking about daily moving averages, and I'm going to put the 200 in here, alright, when you're talking about daily moving averages, and we have the 20 moving average here, and the 50 is the brown, there is no 200 for the ES. They're so key in analyzing what to do. Alright, folks, we're reiterating what we think is going to go on tomorrow. We think we might gap up or we might gap down. We're not sure about the open, but overall tomorrow we do think we head lower. All right? This market is not done dumping out. You're going to have major moves down, and we will see you at March lows very shortly, we feel. All right? In addition, I want to just go over the announcements quick. We have the free intraday stock chat, one-day free trial coming on Monday, August 13th. Email me at gareth@inthemoneystocks.com to get the password and everything settled for that. That's GARETH at inthemoneystocks.com. We basically, today, guys, we had a good day. There's not a lot of day trades until the afternoon. The morning was slow, then trades picked up in the afternoon as we were just able to short everything and everything possible. In addition, we did a lot of teaching today. I went over level 2. I went over chart technicals. People ask questions. It's a phenomenal room. Come join. It's only $199 a month for freaking a one-month seminar. You can't go wrong. All right, folks? The other thing is the swing trade alerts. Be ready when we tell you guys to go short or long in these stocks because they're quick moves. You got to be on board. You got to sign up for exact entries and exits. All right, folks? Have a wonderful day. We'll talk to you guys tomorrow. Take care and good luck. Be safe.